Okay, in this video, we're going to go over the accounts receivable T accounts. So let's take a look. And the example company we're going to use and recreate their T accounts is Apache, which is an oil and gas company. So they explore and they bring oil and gas out of the ground and then they sell it to their customers. And so here is Apache's balance sheet and the asset section of their balance sheet and the current asset section of their balance sheet actually. And you can see that as of December 31st, 2019, they had net accounts receivable of 1062, and this is in millions, okay? So this is receivables net, okay? And it's net of the allowance for doubtful accounts. So let me show you the two T accounts that we're going to recreate for this company. They are accounts receivable, gross, and the allowance for doubtful accounts. And what you're seeing on the balance sheet, this 1062, is the netting of both of these accounts. And so we're going to have to separate these two accounts to recreate the T account. First, let's recreate what we can of the accounts receivable gross T account, okay? So this account has a debit normal balance, so its beginning balance is a debit. When we sell products on account, we increase this account with a debit. The credit side of this entry is to revenue on the income statement. When we collect money from customers, we debit cash and we credit accounts receivable. And when customers default or they say they're not going to pay, then we debit the allowance for doubtful accounts and we credit accounts receivable to eliminate those customers from the list of people who owe us money. And then the ending balance of accounts receivable is a debit balance. So first we'll start by filling out this accounts receivable T account. The beginning balance of this T account is the 2018 balance, okay? So now we're looking in this column. Here's net accounts receivable for the year ended December 31st, 2018. And so gross accounts receivable is going to be the 1194 plus the 92, okay? So when they say net of allowances of 88 and 92, that 92 relates to the 2018 column, and the 88 relates to the 2019 column. And so 2018, the beginning balance is 2018, is 1194 plus 92. That's gross accounts receivable. The ending balance is 2019. Okay, and that's going to be the 1062 plus the 88. Okay, and so we'll just convert both of those to numbers. Okay, great. Now let's fill out the allowance for doubtful accounts T account, and that is just simply contained within this line item here. Let me erase this so you can see it more clearly. So let's just look at this line. Receivables net of allowance of 88 and 92. So 92 was the prior year allowance, so I'll put 92 as the credit balance, and 88 is the current year allowance. And recall, the allowance for doubtful accounts holds a credit balance because it's a contra asset. And so it begins with a credit balance of 92. When we add to the allowance, we debit bad debt expense and credit, here's that credit, the allowance for doubtful accounts. And when customers default, we debit this allowance, reducing it, and we credit accounts receivable. And so here we filled out all we can based on the balance sheet of these T accounts. And now we need another piece of information, and we're going to more fully fill out the allowance for doubtful accounts T account. And some companies will include in their 10K something called Schedule 2, which is the valuation and qualifying accounts. And one of these valuation and qualifying accounts is the allowance for doubtful accounts. And so some companies will give you this information, and sometimes I need to give you this information if I ask you on a test or something like that. In the Apache case, they actually give you Schedule 2. And you can see for the year 2019, they're basically giving you the roll forward from prior year to current year for this account. So allowance for doubtful accounts at the beginning of the year was 92. We can see that 92 right here. And there's the 92 there. At the end of the year is 88. So there's the 88, and here's the 88. And they show you what affected that balance from the beginning to the end of the year. The additions were from the provision, okay? And the provision refers to bad debt expense. So I'll write bad debt expense there. the provision for bad debts is sometimes what that's called. And that was $3 million for the year. So that $3 million there is a debit to bad debt expense, and a credit to the allowance. Okay, and that was for 3. And what we're going to plug into our T account is, since it's the allowance T account, we're going to plug this one into the T account right here. So you can see we plug in that 3. Now this 7, this -7 here, is related to uncollectible accounts that were written off, net of recoveries, okay? So this is another word for defaults. And this journal entry is a debit to the allowance and a credit to accounts receivable. And that's for 7. And this, since we're doing the allowance T account, we're going to plug this one in, and we're also doing the accounts receivable T account actually, so we'll plug this one in as well. So let's do that now. You can see here's the defaults item in the T accounts, and we'll plug those in. So there's a debit to the allowance and a credit to accounts receivable. Okay? So you can see now we've fully filled out the allowance for doubtful accounts T account, and we're getting pretty close on the accounts receivable T account. All we need now is revenue and collections. So most companies actually do not disclose collections, but all companies, as we know, on the income statement disclose revenue. So we can go straight to the income statement, the statement of consolidated operations, to find what revenue was for the year 2019. And here it is, 6315 in millions was revenue for 2019. And so that 6315 was a debit to accounts receivable and a credit to revenue. And what we're seeing on the income statement here is the credit to revenue. And so I'll plug that straight in to the revenue on account section of the accounts receivable T account, 6315. Well, as you can see, we're only missing one item in our T accounts, and that's collections. And since T accounts, you can just solve them through, we can just solve for collections. And so looking at the math of this accounts receivable T account, we have a beginning balance, which is a debit of $1286. We add another debit on top of 6315. Then we're going to subtract any collections that we had and subtract these defaults. And when we do all of those additions and subtractions, we'll end up with 1150 as the ending debit balance. And so we just need to solve for this blank here. And the blank is 6444. And so now we can just easily plug in collections were $6,444,000,000. And now we've done it. We've completed the accounts receivable T accounts, gross accounts receivable, and the allowance for doubtful accounts.